Hey everybody, Cam here with a weekend video. Gonna do a little something different here. Quite a bit longer video. Just gonna look at about everything in general for the stock market. So all the tickers that are gonna be talked about are gonna be linked in the description. So if you want to jump around, feel free to. Obviously, a longer video if you don't want to watch the whole thing. Cheers to you, but we're gonna be looking at first SPY, ETF, then QQQ. So the two big indices people are looking at. So SPY and then off the NASDAQ. And then bigger tech names: Apple, Facebook, Twitter, Snapchat, AMD, and Roku. Roku had its earnings last week, got a bounce. And then we're going to look at EVs: Tesla, NIO, XPEV, along with ChargePoint and Blink, as Biden administration is set to speak more on their infrastructure plan in the upcoming weeks. And then from there, we'll go look at the cannabis sector. So TLRY, they did their merger last Friday, combined with Afira. And then with CGC, ATB, Sundial, and then we'll go to AMC and GameStop. Still looking for the squeeze there. Still very popular theories out there with Wall Street Bets and YouTube in general for people looking at stock market. And then lastly, we'll look at some crypto Bitcoin plays. As you know, Dogecoin did not hit the dollar like people were looking at after Saturday Night Live last night. With Elon actually sold off 72 down back in the 40s, now bouncing back up to about 60-cent level. And Bitcoin has been flirting the last couple days at 59. See if we can break through 60 this week. So we'll look at RIOT, Mara, Can, and SOS. So like I said, all those tickers are going to be linked in the description, so feel free to jump to them at your choosing. So first we'll look at SPY. So for everything, just to recap what we're going to do here, just going to look at daily and weekly charts, not going to look at intraday. So first we'll start with the SPY. This is the daily chart. So you see Friday, put in a new high, 422.82, and Thursday, Friday, pretty significant green candles, hammer candle on Thursday. You can call this another hammer on Tuesday with that big sell-off when Treasury Secretary Yellen was talking about inflation. They walked that comment back in the afternoon. The repo market also went negative on Tuesday too, so there is a lot of negative things going on with these, fundamentals of the economy, especially like the jobs report on Friday missed by 74%, so pretty outrageous. But hey, we'll set new all-time highs because the stock market doesn't necessarily reflect reality right now with everything going on. With that being said, my personal opinion is that stocks are just going to keep going up until the Fed is forced to talk about inflation and rising commodity asset prices. Like look at lumber, copper. I think we'll probably run into some food shortages here from things I've been reading about, especially in Africa and Australia. The price of wheat rising and a lot of potential drought and famine going on later in the year. So not a great picture in a lot of aspects moving forward, but stocks are going up right now, and I think the biggest catalyst for a downturn is going to be those rate increases, interest rate increases by the Fed to combat inflation that is here. Warren Buffett says here in their yearly Berkshire Hathaway shareholder meeting. Michael Burry's been talking about it for a while. A lot of the bears that come out of the woodwork just talk about it too, and we'll see what those numbers are coming up for May and into the summer. As usual increase in summer activity from households in spending, vacation, etc. So you'd like to see how that affects the consumer's dollar moving forward. But here we'll zoom out a little bit on the daily. Obviously, massive uptrend on SPY over the last year. The fib levels are really from this previous high back in February. I haven't adjusted them yet, but that did act as resistance before, and you'll see kind of where we were at this week. A lot of volume here between 418 and 416. Where we hung out there for the last 2 weeks, broke through that shelf level on Friday on the gap up, so we could look to move higher. So if we're going to look at this Keltner channel here, so this is a 2.25 active trading range. We could run into some resistance around 423.4, excuse me. That would correspond up there about 42.50 on the SPX. If we go look at the weekly chart, you see time frame here on the weekly side of things. We put in a hammer candle, so Hammer candles are, very bullish. Obviously, it means, we start off, bears came in, tried to push this thing down, sell it off. Came a point where bulls supported it, and we push up higher. And here the candle's green, so that would imply that bulls are back in control, could push this thing up. And you see, corresponding with the volume, looks like the bulls are really protecting that 411, 410 area, the increase in volume here. And you see in the close, still we're above this block of volume that we put in. So those look at signs for a further increase higher. But one downside to a hammer, kind of at the top of, a trading range or to an extreme level. If it's just in a consolidated area, that usually means bullish. But if you can get to the top where you get a hammer at the top of a trend, and that would indicate, you could have a reversal on the horizon. Usually the hammer's red. In that scenario here, we're green. So if we can get a gap up over the weekend over this 422.82, we could take off pretty quickly. What I've seen from implied open for futures was, slightly green, by like 0.2%, nothing huge. So we'll see what those numbers are in about an hour and a half time frame. We'll look at QQQ, so tech. So obviously, the NASDAQ, didn't put in a new all-time high this week. We did that on the 29th, 342.8 on according to the ETF here. But kind of a bigger pullback is obviously inflation, especially would hurt the tech stocks more. Just based off future cash flow, the higher that inflation level and interest rate is, you have to discount those future cash flows by more, and that affects it exponentially, and would drive down market caps of companies. So push us down. But you can see that this week you kind of have a double bottom. Still Tuesday's move. Thursday the hammer's not as big. Indecision candle on Friday, right at the moving average, right on the 9 EMA right here, but also sitting kind of right on top of this block of volume. So tech is not looking as bullish as the S&P 500. S&P 500 is a better picture of the entire market. NASDAQ, truly is just tech stocks. So you can say tech stocks are still kind of more hesitant or reserved based on inflation numbers and what was saw this week and said from administration officials in the Fed. So here on the daily, we did gap fill. So one thing to look at here is we got the hammer, gap open higher. We filled the gap on the draw from Monday to Tuesday, but the bears knocked us back down. We poked into that candle from Monday, sold us back off, made this indecision doji. So a typical doji roll, talked about it a lot in my other videos, right? You want to see what the next candle, whether it's green or red, and that usually tells you the direction of the next upcoming move. And here, like I mentioned about the hammer candle being at the top, right here would be the middle of the range. So this doji could mean, this uptrend, this 2-day uptrend's over, or, it could imply that, the downtrend could be over off the indecision based on how we open on futures and tomorrow morning pre-market. Go to the weekly chart. See here, do have a hammer candle formed like the S&P 500, but no new highs. So this could be a scenario where would be more likely that could be implied that the top was put in. We could pull back, at least maybe retest the 9 here again on the weekly side of things. As you see, we are sitting below this block of volume. This block of volume is above 336, and we're sitting below that right now. So we're going to need, volume to push through that 336 level, unless we can gap it overnight. So that's kind of what I'm looking at here for overall market, tech, and S&P 500. We'll go here now. We'll go look at Apple. So Apple has been something I've been trading this last week. It's just easy to get in and out, tons of volume, easy couple hundred share trades going on. You see, we put we had the split in Apple back in September. Pulled back, put in higher lows, went and put a new high in at 145 on their earnings at the end of January. But the earnings event ended up being a sell-off. So we sold back off, and then really we got that back here in the 1-teens, kind of put in this inverse head and shoulder pattern here around 120. All right, shoulder, head, shoulder, pushes back up, and then we ran into resistance again, between 137, 138. You could really call this probably like a double top if I put a price level here, right? So we moved up, gapped up on this high on the 29th after its earnings, right? Ran into the prior resistance here. You see that indicated by the volume. It's one thing I hate Thinkorswim is switching to that price level. It always can't click out of it, but we moved in that higher volume, pushes back down, and as you can see now, a lot of volume consolidated between 135 and 133. Obviously sold off this week. Hammer big green candle on Thursday. That'd be a bullish engulfing signal. So this was actually a play I held overnight on Apple on Thursday. I got out of it pre-market, but before it actually did move up to the 131s. But we pulled back, but bulls were able to push this thing back up above the close from Thursday. So look to see how we open for things on Monday. So here still on daily time frame, we still do have the 9 EMA and the 22 moving down. 50 is pretty flat right now. That could be another area to look to bounce off of down into the lower 129.22 area, and this low of the candle from Friday at 129.50. So weekly side of things a little different. So this would be called a spinning top candle, and here weekly side of things still do have a rising EMAs. The 9 right now, we close above it, so that would be another level to look at. That's right at 129.56. So it looks like we could have a lot of buying support in the low 29s if we do gap down or look to move lower this upcoming week. But 2 big red candles in a row, so look to see if we can get some change in direction for Apple. We'll go to Facebook now. So Facebook, like you see there, put in that new high last week off their earnings, so pretty huge gap last week, and then pull back, profit taking is occurring. Was not able to completely fill the gap, right? So 310 was the high on the 28th, got down to 313 this last week Tuesday, and still seeing the similar kind of trend, or 5 candles in a row for these tech stocks, right? Red Monday, gap down, long wick Tuesday, lower, inside day Wednesday, big green candle Thursday, gap up, sell off on Friday. So you're going to see that trend with the Apple, Facebook, and Twitter's a little bit different as it dropped on its earnings, but we'll look at that one next. We see here, we do kind of have this resistance level with the standard DEV, right? So we held it as support on Monday to close, gap below it, and kind of pushed back up into it on Friday and sold off that level once more. This previous high around 315 is kind of looking as that support candle. If we zoom out, you can kind of look at the volume. That's kind of where volume base is supported up in this area, right? So we got new highs. So obviously going to be less volume there, right? Pullback zone is about 313, 314 for Facebook. Look at the weekly side of the candles here. Last week's candle is definitely inside of the prior week. Some people would call, depending on who you talk to, so Rob Smith and Black, if you use his 312 method, he would still call this an inside bar, right? We're still inside the entire body of the last week, so this would be an inside bar type play. I typically like to see the open and close inside the prior candles, open and close, but still, this is kind of like a reverse piercing pattern. So piercing pattern would be you get a big red candle, drop, green candle moving back in. So this is kind of the opposite. So if I think it's called like cloud cover or something. Can't entirely remember off the top of my head, but we made that push up higher. Profit taking occurring. We pull back in the middle. Close is well above the 50% area of this bar. So this could just be a pullback and look for a move higher. Definitely something to consider if tech takes off this week. Now we'll go to Twitter. So Twitter, obviously here from last week, significant gap down on their earnings. So closed at 65, opened the next day at 57. So that's almost a 13% drop, and continued selling basically this entire week. We got a hammer candle on Tuesday. Excuse me, that's actually Monday's candle. So Tuesday actually selling was weaker, but Monday, sold off pretty strongly. Formed a hammer, stayed inside the hammer the next day. Got a green hammer on Thursday, gap up Friday, but the low on Thursday is below Monday's. So if you zoom out, you see basically where we're at. We gap down right into this consolidated area back in December before had this pretty monstrous run through January. Basically close to doubling, 44 up to 80. And here see on the daily too that we're hanging out right about the 200 EMA in this level. Still, after a significant move down, you look to see a gap fill. Obviously, first target on the gap with overhead support is going to be the standard D level, and then the 9 EMA would be a target to estimate where you're going to run into resistance. As the next candle forms, this 9 EMA is going to drop, so it'll probably correspond with this volume level. So that could be between 56 to 55 area in the next couple days if we can get a move back up. I mean, right now, like in my eyes, I'd put an alert kind of off this low 52 area, or if I want to go long, I'd risk off this 52 area. As hammers are pretty good candles to risk off of from that buying support here. You see, just on the weekly side of things, pretty ugly the last 4 weeks. 4 red candles, high 73 down to 52. So that's what, 30% move. Do have the 50 EMA here, looking as additional support as well. So would like to see if here on the Keltner channel type side of things, geez, I can't speak, sorry. We like to move back to the 22 EMA. That's going to push back at 60. I think we'll probably need a lot of volume for that. But on the standard D side of things, right, this solid yellow line is neutral, so we could move lower as well. So like I said, I'm going to be looking off this $52 area to risk off of, right? So if we can sell back to it and access support, look to go up. If it breaks it, going to look for it to go down, at least probably down to this $50 area, corresponding with that 50% fib. Move forward. Next, we'll look at Snap. So Snap, Twitter, obviously their Facebook, all of them generate money off their ads. Snapchat actually increased users while Twitter lost users. But to see, go back out. But you see, Snap's kind of stalled out after with that 73.59 high end, kind of stalling out. 64.65 area, kind of a 3 top. You call this head and shoulders. Shoulder, head, shoulder, drop back down. Pretty sizable move down this week for compared to the most tech names. 4 red candles, Thursday candle, couldn't get a hammer like the others, but we also had a green candle on Friday, so a little bit different structure for Snap. But you see here, we did pull back down into a higher volume area, and we closed right at this kind of cliff of volume, right? So if we can get over that 54.75 area, we do have less volume to push us back up to this 9 EMA. So if we get positive gap up, we could move up to the 9 EMA either Monday, Tuesday. Pretty sizable move, right? 54.7, 56.8. So a $2 move, that's 4% move for Snap. And obviously, by the size of its candles, that's well within its ATR for a day. Look at the week side of things. Obviously, huge red candle. Support, obviously, here from the prior in the 50s. So look to see if this consolidated area acts as a bounce and pushes back up. Basically close right about that 22 EMA level. So now we'll see if on the weekly side of things we can go test the 9 again. 58.8 would be a target there. AMD. So obviously there has still been a shortage of chips. Intel and other people said it's going to be a while before things get better. And AMD tried to get through that $100 mark back in January, couldn't get through it, and putting in lower highs. Recently, we got this gap up on earnings, and then earnings event was just a huge sell-off, right? So put in the $89 high off earnings, and then within the next week we're back down to the 76. Do have the hammer candle here on Thursday to play off of. Friday, indecision doji, couldn't close above the 200, pushed up to the 9 EMA, couldn't get through that as well. So if AMD can't recover this 9 EMA tomorrow or the 200, I'm going to look to go short on this. And as a target, first target would be a 77, the hammer from Tuesday. Next target would be the low at 76.50. And AMD is pretty good daily trader as well. Obviously a lot of volume, daily volume, easy to get in and out, and it usually follows market trends pretty spot on. So AMD will be a watch for me. Weekly side of things, right? Kind of a gravestone doji pushed up, sent us back down. Big red hammer candle last week. So you see we found support off the 50 EMA, so we could test that one more time if we don't get some bullish pressure from AMD. Oops, ROKU was next. Oops, come on. So ROKU side of things, daily, you see we moved up quite a bit. Earnings after hours on Thursday, huge volume bar on Friday. So pushes back up, slows us back down. We had that 486.72 high. So ROKU obviously just been on a tear for the last couple of years, honestly. So 100 was the low to 2020. I mean, I remember it was down like $20 3 years ago, up to 486. Now we're pulling back. So we do have kind of this downward channel that we've been trading in. Probably decent. So push back in. So that, we could potentially target something long-term downside to this 220 level where there is a lot of volume sitting right now. We couldn't reclaim the 9 EMA here on the daily. So we could potentially move back up to test this volume block 360, 350, get overhead if we can't get through the 9. But we are kind of channel bound right now for ROKU, this downward channel, both sides of it. So we'll look to see whether we can get some good range. Obviously this thing it is volatile, right? 272 low, next day got up to 337. So that's 22% move, and you see these prior candles get pretty large. So it is volatile, lower volume, so it can be a tricky trader. But to me, I think this massive move it's had the last couple of years, naturally you're going to have a pullback, and we'll see where it ends up with price action. So here, weekly side of things, big hammer candle on the red, downward trending 9 and 22 EMA. So to get back to the 9 on the weekly, it's got to get back to 350. Here, say we found again support off the 50 EMA, and we closed just below the volume block on the weekly. So to get higher, we're going to need an increase in volume again for this upcoming week. All right, so that's all the tech stocks. We'll go to Tesla now. Tesla, still tech stock, but here on the daily side of things, we are still in this consolidation pattern, big triangle forming. We pushed to the highs 780. Basically teed off this ATR on the Keltner channel, and then consolidated over the prior 700 resistance area, and then we sold off through that level. Big green candle on the 30th last Friday to get us to close back above the EMAs, and then failure at it this last week, and then failure on Friday when we got that retest of the 9. So Tesla, it's been hit with a lot of negative PR in China. They're going to be crunched with the chip situation as well, even though they said they secured manufacturers and supply of them. But Tesla's just always had super high valuations and expectations from Wall Street. So we'll have to see what Elon has in store going ahead. Go to the weekly side of things. 2 red candles sitting right on the half standard Eve mark, the 22 EMA. So I think Tesla's probably just going to be range bound a little bit more between the triangles in the upcoming weeks. Then we'll go to NEO and Ping, its competitors in China, so they put out some news. NEO's expanding into Norway. We do have this declining tops. Declining tops for NEO here. We do have a pretty good base recently. You can call this another consolidated triangle down here. This one big drop, long wick, but kind of a double bottom at this $34 area. You see we sold off this week as well, looking like the 200 could be acting as support, but couldn't reclaim the 9 EMA. So look to see if we move down a little bit lower, test the bottom of this triangle. As NEO's week wasn't as bad as XPEV's, XPENG's. We'll look at that. You see this consolidated triangle as well, right off the 0 standard dev, neutral standard dev mark, bounced off that this week. So that line is pretty parallel to the triangle drawn. So look to see if that offset stays. But we could get some consolidated here trading with NEO as well. And then we'll go to XPEV, XPENG. Go back out to the daily side of things here. Bigger sell-off for XPEV. Basically now 2 straight weeks. Couldn't reclaim the 22 and the 9 EMA. Big sell-off. Looking to see if this the bottom of this hammer, which was the bounce off before its prior earnings, back on March 8th, right? So the low of this candle is 25.27, right? We're within threatening distance of that. So huge move down on Thursday, right? We had the bullish engulfing, or excuse me, not bullish, bearish engulfing candle, right? Big red all the way outside the green close of the prior day, close and open the prior day, gap down, sends us lower, pretty big sell-off, support 25.77, and then actually they had XPEV had pretty solid day, at least in the morning on Friday, and then pretty strong sell-off in the afternoon, and it's kind of a gravestone doji, so you could look for more implied downside. So I'm definitely gonna be watching this. If it gaps lower tomorrow, I'm gonna look to go short at least down to 25.27, and then see if we can get, if it's supported there, I'll cut it. If not, look for a drop. And we do have earnings coming up this week on the 13th, so that could be in play too for a move one way or the other. Always expect increased volatility the week prior to earnings. Here, the weekly side of things, right? We haven't been able to reclaim the 9 and the 22, since March, mid-March, into March. Really, it's a test of it. It's been acting as overhead resistance, so could keep selling off. Also, the 200 EMA on the weekly is 26.8, so that could be overhead resistance as well. And then we'll go to charge point. So charge point, obviously, charts pretty similar to the EVs, as it's basically an infrastructure play, a supporting type industry to those vehicles, and Biden administration is planning to put in a ton of money into charging stations across the country. Oops, what am I doing here? I apologize. Get drawn back out, but you see we do have this pretty significant downtrend. So since its highs back in December, we just had straight lower highs. They can call this one higher, but pretty big lower highs. But we do have kind of this double bottom here, down in the 19.5 off this big hammer. One test here and a bounce, 2 tests here and a bounce down to 19.04. So if we get to the bottom side of this triangle, or this 23.6 fib, which is at 19, fourth test usually not a good indicator of strength, so we could fall through. And looks like we do have earnings at the end of the month, but we could be range bound a while. Between this triangle here, can't reclaim on the 9 EMA, right? So sold down through it on Monday. Pretty good pin hammer here, doji, and then similar market structure the last couple days, indecision candles. Buyers push us up to the 9 EMA, can't get through it, send us back down. So again, here, this to me is kind of a similar play to X being basically everything that's been arranged around tech stocks too, playing the next open or close, especially if this moves down between $22. Look to get short pretty quickly, but obviously that could change fast with positive news that comes out with the infrastructure plan. I believe when it was talked about was this into March, the 30th into April, right? So quick move from 21 all the way up to 30, 32. So 50% move in really 3 days. So this could move pretty quickly. So be prepared. I'll just stay on the daily side of things now to make the videos pretty quicker. I'm already at what, 30 minutes, but blank, you can say almost exact same chart structure, lower highs, a little bit more dependent, no double bottom. See here, we're getting kind of to the bottom, right? Not necessarily it's up there. It's probably better if I just draw this one there, at least call that close to three spots. So a descending triangle. So we'll look to see if it breaks this bottom. We definitely have the 200 to act as support, but still can't reclaim the 9, 22, or 50 EMAs, and both of them are, or technically all three are in order. Now descending wise, 50, 22, 9 going down. So that would imply a further move negative, but similar with charge point end of March, you get a move from 34 up to 41, so obviously muted compared to charge point, but still 20% move. So this thing will run if need be. So next we'll go to weed stocks. So TLRY, they had their merger, basically been selling off. The merger was approved on the 30th, so kind of a gravestone doji. Monday, they immediately announced that affiliate shares would transfer over to that Monday, and then you just got a huge selling news event, right? So they usually announce it, say, hey, your stock's going to transfer at this date. They did it in one day, so a lot of people that were holding or trying to play the arbitrage play, I mean, they really kind of royally got screwed. Sell off all week, big gap up on Friday. They got a price target increase, and I believe a buy rating. I think it was from Bank of America. But saying like the merger was perfect, they're perfectly poised to jump into American market when that occurs. Obviously, a lot of people are going to have different opinions on that, but that's their opinion. Large volume on Friday. Looks like we're going to have earnings after market hours tomorrow. I don't know whether or not that's going to include all of the FIRA's books as well, but I'm sure that'll be of interest. But you see, couldn't close above the 9 EMA or the 200, so we do have some resistance there in the mid 16s. But this thing has been putting in some pretty big candles, so could be volatile play next coming week. So here, obviously, on the weekly side of things, with the huge moves on it, got the 22 and the 9 on top. So look to see what happens there for TLRY. Go to CGC, right? So chart structure is going to be pretty similar again to TLRY, more negative. We kind of do have this, just descending top line again, right? Almost spot on. And if we go from the hammer on down, right? So we could be tightening on this triangle, looking for a break one way or the other. Again here, try to push the 9 EMA, failed, and I guess we did close slightly above the prior day's open, or it's exact, close right at it. So we'll look to see how we fill out the rest of this triangle going forward. CGC, ACB will be next. So Aurora Cannabis. Daily side of things, charts looking a little bit better than CGC. Obviously not as big as name, but still, descending highs or lower highs as from the prior move in February. And you see this point of controls, right? Basically where we have this Greystone Doji, gap up, engulfing bearish candle, sent us down. But we do have these back-to-back hammers this week. You saw the other stocks, almost all of them, pretty significant move lower this last week, and then a bounce here, stayed stronger, found support over 825, pushed the 50-day EMA, couldn't get up above it, 9.2. So ACB is looking in a better position for a bullish move than its contemporaries. And then we'll go to Sundial. So obviously, huge run, 394, Chart's looking almost identical to TLRY. Say here still all these descending triangle type moves. Alright, so we're getting really tight in this triangle. See if we can get a breakout. So breakout above would basically be corresponding with a break of this 9 EMA. So that could be a level 2 alert going forward. And then we'll go to everybody's favorite AMC and GameStop. So it's definitely one I've talked about a lot of videos. We had this consolidating triangle here, broke out above it, and sold off back down. You can see what this descending line was acting as resistance before. This week acted as support, and then the line that was acting as support acted as resistance on Friday. We tried to push higher, got up to 979, couldn't close above the 9 EMA. So we'll look to see if we now move into this section of the triangle going forward. And you see here by volume, right, we do have a ton of volume, between $9 and $10. So we could be range bound for a little while. GME, somewhat similar. We had that quick retest of the overhead resistance. Didn't have a single candle that closed above it. So we sold off through it on Monday as the market fell. Hammer candle on Tuesday. And then the line that was acting as support has basically acted as resistance the last couple of days. Can't reclaim the 9 and 22. So now the market, or the pattern, is basically similar to AMC. Probably be range bound in here in the triangle, unless we get a positive move breakout. And obviously the volume chart's messed up here, as it has all this volume down here in the single digit area. So I think AMC and GameStop could be range bound for a little bit, unless a positive catalyst is released. So now we'll go to the cryptos. You hear RIOT, Bitcoin right now sold off from 59K level, sitting at 57.9K. So somewhat similar chart again. Have these descending top lines. I'll make a triangle. Here we do have this kind of hammer from the 5th, 34.25. Let's see if we can get that price level, just mark it and see how close we were the last couple of days. I think we did, sell off below it, and that's close enough. But down, you see we are in an area with thin volume. So if Bitcoin doesn't move, I think right tomorrow they kind of act like ETFs, where if everything's not going up, they kind of just keep selling off, and they really like the fast moves off Bitcoin. So if Bitcoin doesn't break out, this thing could sell off all the way back down to the 2200 EMA, and that's basically corresponding at this 27.3 level, and that would be here prior support in January before the run up to 79. So look to see if that is in play for RIOT. Sold off through the EMAs on this big red day on the 14th. Try to get a test through it here, about a weekly consolidation at the 9. Couldn't close above the 50 or the 22, and we get the sell off lower. More chart's going to look somewhat similar. In the last couple of weeks, obviously the high was more recent, but similar. 14th caused a sell off through the EMAs. Got this bounce down here in the $27, $28 area from prior support. Pushes back up to the EMAs. Couldn't reclaim the 22. 22 acted as resistance here, right? One day, pushed through it. Got a gap up, opened right at it. Couldn't close above it, sold this back down. And then now the 9 EMAs acting as overhead resistance. I do have the 61.8 fib here, as an area to look at, where we found support on Friday. But below that, do have an area of lower volume, and then really the prior move support. Oopsie, I hate that with these finger swim. Come on. There you see the prior support on the first leg of the move, kind of sitting down in the $25, $26 area. So we could see a move lower with Mara. And last two here, finish this up, get Can. So significant move up, kind of sitting here now. See if we can get this to act as a double bottom down here, and the $11 area. Oh, did not double click. 11.2, 11, low 11s. We're getting really tight. We've had some huge swings on days, volumes tightening up. 9 EMA, just like the others, is acting as overhead resistance. So look to see if we can get a move with Bitcoin. If not, break of this 23.6 fib, get a down increase in volume, we could be back into single digits like SOS. And SOS is going to be the last one we're going to look at. Obviously didn't put in the high of $30 like Can did, but somewhat similar chart here the last few weeks, right? So lower highs, somewhat consolidated, maybe a little bit better scenario, right? We had this big green engulfing candle off April 20th, 420, right? Sold us all the way down 3.5, bounced back up, flirted around with a 9 EMA, couldn't find support. We had this hammer candle on Tuesday. That's looking like it's acting as support for the last 2 days. So that could be a level to mark, right? That's right at 3.8. So that could be a area to look at buying if Bitcoin moves up overnight into the open. So that's what I got for you guys. 40-minute video, a lot of stocks there, just looking at the daily side of things. Let me know if you like this version's better. I hope you jumped around, got something out of this. And as always, please leave your feedback in the comments. I will respond, and I appreciate your criticisms, your comments. Just let me know how I can make these videos better for you and get more use out of them. So, appreciate you taking time to watch the video. Hope you guys have a great Mother's Day, and we'll see you tomorrow.